It is very important when you are building a strategy to use the right style for the right instrument and the right filter. Today I will discuss Aroon Indicator and how you can use it as a signal to enter and exit in a strategy or as a filter for other signals. Aroon Indicator is used to identify trend changes in the price of an asset. And this is the formula for Aroon Indicator. So it consists of two indicators. One is the Aroon up and the other is Aroon down. And here is a representation of how that looks like. So the green line is the Aroon up and the red line is the Aroon down. And that is what we are measuring. In this case, I have Aroon with a look back of 20 bars. So when the value of the green indicator, which is Aroon up at 100, that means the current high is the highest high in the last 20 bars. And when it is 0, that means the highest high in the past 20 bars happened 20 bars ago. Same goes for the red indicator, which is the Aroon down. So when the value is 100, that means the current low is the lowest in the past 20 bars. And when the value is 0, that means the lowest low happened 20 bars ago. And then we have the Aroon Oscillator. And basically the oscillator is taking the Aroon up and deducting Aroon down. So it's the green minus the red, and you get this value. So while the Aroon up and down hover between 0 and 100, the Aroon Oscillator hover between minus 100 to plus 100. And the 0 line represents the cross. So whenever the green, the Aroon up, goes above the red, which is Aroon down, then we go above 0, and the opposite is true. So just like the DMI plus and DMI minus with the ADX, Aroon Indicator is kind of the same thing. We are measuring the trend and the strength of the trend. And we do that by either using both the Aroon up and down or using the oscillator only. Now I want to bring something important to your attention. Each platform, they have their own programming language and they program their own indicator. And there are some slight changes between a platform and another. And that's happened a lot in Strategy Quant X, because Strategy Quant X, usually they do their own indicators and they do their own calculations. And then you need to take that strategy into another platform. And the most common questions I get in my community and in my algo trading masterclass is how to match these strategies that are built in Strategy Quant X into another platform. And the reason that happens and will always be there is because of the following. Like I showed you from the equation, Aroon up and Aroon down should go between 0 and 100, because from this equation, if the current high is happening now, that means it's 0 bar. So 25 minus 0 is 25, divided by 25 is 1, multiplied by 100, that's 100. And if the highest high happened 25 periods ago, that means 25 minus 25 is 0, divided by 25 is 0, multiplied by 100 is 0. So from this equation, the indicator should hover between 0 and 100. Let's check. This is the red one. So you can see the value is 100, but the lowest is 5. Same thing for the green. This is Aroon up. You see the value is 100, but the lowest value is 5. And this is Aroon Indicator and Oscillator in multi-charts. So again, it's the same thing as 20 bar period look back. And if we see, so this is the maximum, Aroon is 100. And if we look at the lowest value, it's 5. Again, for the Aroon up, the green, maximum value is 100, lowest value is 5. So in this case, these two indicators match, but they don't match the equation. And now let's go one step further. The oscillator, like I mentioned, is Aroon up minus Aroon down. So theoretically, it should go between minus 100 to plus 100. So here, if I check the value here, 85, this is 100. That's the maximum. If I look the lowest, this is minus 100, which is true. But since this always goes to 5, then the oscillator should not go to minus 100. It should go to minus 95 only. it shouldn't reach minus 100. Okay, so we find something wrong here or something that doesn't match. And if I go to multi-charts and use the oscillator, you can see the maximum oscillator value here is 95, 95, 95, 95. So I checked all of them. The highs are always 95 and the lows are always minus 95. So they never reach 100 or minus 100. So although these are small discrepancies between the indicator and the oscillator on the same platform or between both different platforms, these will usually result in your strategy having a different behavior. So if you run it on multi-charts, it might produce 300 trades with 100,000 profits. And if you run it in TradingView, you might get 50 trades, $80,000 profit. So sometimes the strategies will behave totally different in each platform, although you're using the same strategy. And sometimes they have a little bit of difference, but rarely they match exactly 100%. And the reason is what I showed you, because there are small discrepancies in the calculations of these indicators. Something else I want to show you, the above zero cross, that means the Aroon up is above Aroon down. And if we go the last three, so this one happened on May 18th, and then this one happened on March 31st, and this one happened on January 13th. And if we check TradingView, so this one happened May 18th, which is correct. And this one happened March 30th. So in multi-chart, it was March 31st. So that's 1 day discrepancy. And then this one happened January 18th. And in multi-charts, it happened on January 13th. So that's 5 days discrepancy. So the further back I go, the more discrepancies you will find. And of course, again, that will affect the same logic for the strategy when built in TradingView and multi-chart. And of course, that applies to Strategy Quant X and TradeStation and MetaTrader 4. So then what's the solution? The solution is always to stick to one platform. Or if you are using two platforms, for example, I develop strategies using Strategy Quant X and then move them to TradeStation or multi-charts. In that case, multi-charts or TradeStation have the final say. It doesn't matter what Strategy X says that the strategy profits or number of trades or the average trade, that all is good in Strategy Quant X, but the final say comes from the results in your trading platform. So here is a strategy using the Aroon indicator as a signal to enter and to exit. So I'm using the Aroon indicator of a look back of 20. So this is the look back. And then I have three variables. So variable one is when we go above this value. So this value is 0. That means whenever we are above 0, we will enter long. We will exit with two levels. It's either the Aroon indicator at 75, or once we enter, we drop to 10, then we also exit. So the 10 acts as a stop loss and the 75 level act as a profit target. And this is the return for the long is 85. And if I do the short separately, so let me compile, and we see the short alone loses money. And if I do the long and short, because now they overlap, we can see we make less money and we lose more here. So all in all, as a signal, it's not good. But that's the default. And like I told you, default is not always good. So let me optimize to find better settings. So this is the entry level, which is 0. I will optimize between 0 and 20. The exit level, optimize between 50 and 90. Stop level, optimize 0 to 25. And the look back between 10 and 30. And we are using long and short. Short usually is very difficult on the S&P 500. But let's see what we get. We have almost 3,000 combinations. So sorting by the average trade above $100, and that's the indicator that I use for the S&P 500. So out of almost 3,000 strategies, we have 387. So that's almost 13% profitable strategies, and it indicates that we can use this indicator as a signal. So this looks in a stable region, and if we double click on it, let's see what we get. So this is long and short. Again, short still losing as expected on the S&P 500. Maximum drawdown we have is 48. On average, we're making 242. So the longs are really good, $410 on average. And of course, we're losing on the shorts. Now, remember, you can still pick something that works both ways. So if I go to the top performing strategy, then we can see that we do make money short and long. Of course, now the average is very low, and most likely this is an overfit strategy. So let's go back to the strategy we picked in the beginning, and this is much more reasonable. Of course, I can cancel the shorts. So this is how it looks like. It's almost 27% drawdown, around $50,000. But remember, you can use the indicator also as a filter, which I think is much better way to use this indicator, because most robust filters are either direction or volatility. In this case, this is a direction filter for any strategy. And of course, the best way to use it is on the RSI2. Why do I always use the RSI2? Is because the RSI2 now is like a standard on at least this channel. Because I featured the strategy in many videos, so we already know exactly how the strategy behaves. And it's very easy to tell now if this filter is good or not. So now this is the plain vanilla RSI strategy, and if we look at it, it's making 140, losing on the short side. This is long and short. And if we look at the trade analysis, the longs are making 642, which is really good. The shorts are losing $20 on average. This is how the curves looks like. We're probably here around 50% drawdown. That is $81,000. So now I kept the RSI2 strategy entries, which is RSI2 below 25 we go long, above 75 we go short, and I just added the Aroon indicator, and we will optimize to see the filter behavior on the strategy. And these are the results, and I filtered all strategies with an average trade below 100, and we have 25.59. That's very high. I mean, almost 90% of the strategies are making above $100, which is expected because the strategy originally is very good. But of course, we want to enhance the strategy by reducing the drawdown. And of course, I can see here, this is sorting by the top average trade. Look at these. Remember, the original strategy made $140,000 with a drawdown of $81,000. And of course, it was losing on the short side. Now here, if I sort by maximum intraday drawdown, look, the maximum is 65. And of course, the lowest one is $22,000. But of course, if I want to sort, let's sort by custom fitness. This is return to drawdown, and this is the best, which is making more money with almost quarter of the drawdown. And all these using 80 and 25.20. So this is very stable area. The 80 exit level, the stop level between 20 and 25, and then all these are 18, and all the entry levels are the same, producing basically the same amount. I'll pick something in the middle. Let me pick this one and see the shape of the curve. So now we're making 150. That's more money. Intraday drawdown is 28. So remember, it was 85. But the most important part to check here now is that the short trades are profitable. That is huge. And if we look at it, it's not only profitable, it's really good average trade. Look at this. The average trade is $400. It's matching the average trade of the long side. Also, it's not few trades. It's 129 trades compared to 200 on the long side. So this is a huge improvement to an already robust strategy by using a simple filter and picking a stable area. And the shape of the curves now looks much better than before. Remember, we had a huge crater before with the RSI strategy. And now this one, they are all below 20%, the drawdown. And of course, we know it's only $28,000. Now, that doesn't mean that you should drop all other RSI2 strategies and pick this one. It is just this one, although it's really good, but it's producing a different equity curve than other RSI2 strategies. So even by changing only the filter, you can get a different kind of results from the same strategy. And if you combine those in a portfolio, then you'll smooth out your equity curve of the same strategy on the same instrument, which is of course huge. And that's one of the key concepts that I push on this channel, which is to always diversify your portfolio through style, through time frame, through side, and then worry about the instrument. Because only by changing simple things on the same strategy, you get different results. To watch more RSI2 strategy, watch this video, and I will see you there.